After studying this module, you shall be able to 1. Understand the division of taxes between the center and the states. 2. Learn about the various constitutional acts governing the taxes. 3. Know about the various acts of the income tax department. 4. Understand the functioning of Central Board of Direct Taxes. 5. Understand the functioning of Central Board of Excise and Customs. Let us start with a brief introduction about tax. Tax is an obligation of financial charges upon an individual or a company by the Government of India or their respective states or the local municipalities. The taxes are computed and imposed by the Revenue Department of the Ministry of Finance. In other words, a tax signifies the sum of money we pay to the government at predefined rates. Taxes are the primary source of revenue to the government by means of which it offers several kinds of services to the taxpayers. There are chiefly two types of taxes, the direct tax and the indirect tax. Next, we discuss the Income Tax Act of the Government of India. The major tax enactment in India is the Income Tax Act of 1961, passed by the Parliament, which imposes a tax on income of individuals and corporations. Act imposes a tax on income under the following 5 heads. 1. Income from house and property. 2. Income from business and profession. 3. Income from salaries. 4. Income in the form of capital gains. And lastly, income from other sources. However, this act is about to be repealed and to be replaced with a new act which consolidates the law relating to income tax and wealth tax. The new proposed legislation is called the Direct Tax Code to become the Direct Taxes Code Act 2010. The act was referred to the Parliamentary Standing Committee, which has submitted its recommendations. The act was expected to be implemented with the changes from the financial year 2013-14. Now, let us understand the tax system in India. There are 3 tiers of government in India. These are union government at the center, state governments in the respective states, and local bodies, that is local governments, including village panchayat, panchayat samiti, municipalities and municipal corporations at the local level. Since the different layers of government operate simultaneously, confusion and financial conflict is possibility. In order to reduce such disputes, there are guidelines or rules regarding the distribution of the revenues and expenditures amongst the different tiers of the government. The system or organization of such rules is called federal finance, based on the definition of federation or federalism, denoting a system of government in which there is a separation of powers and functions between the different levels. Therefore, a federal finance is a system of the financial relationship among various layers of government, particularly center, state. The financial relationship among the union and state governments is enshrined in the Indian Constitution. The focus of this relationship is on the distribution of authority between the center and states regarding 1. How to raise tax and non-tax revenues. 2. How to spend tax and non-tax revenues in the economy to enhance growth and development. Taxes are levied and collected by the center but shared with the states. These comprise taxes on income other than agriculture income and union excise duties on goods counted in union list except medicinal and toilet preparations. The taxation system of India has undergone remarkable reforms in last 10 to 15 years. The Constitution, that is the 80th Amendment Act 2000, considerably altered the method of distribution of central tax collections among the central and state governments. Before this amendment, income tax and union excise duties were the only taxes shared by the states. This amendment changed the arrangement of distribution of central taxes among the center and the states by provisioning for the sharing of the net earnings of all union taxes and duties with the states. Still further, the Constitution, that is the 88th Amendment Act 2003, has involved taxes on services under entry 92C in the union list, that is the list 1, in the 7th schedule of the Constitution. Now we will learn about the constitutional provisions governing distribution of tax. The authority to impose a tax is derived from the Constitution, which distributes the authority to impose several taxes among the center and the state. A significant limitation on this power is Article 265, which mentions that no tax shall be imposed or collected except by the authority of law. Tax imposed or collected has to be supported by a supplementary law approved either by the Parliament or the state legislature. Next, in the Article 246 regarding the legislative powers of making laws. Article 246 of the Indian Constitution distributes legislative powers including taxation between the Parliament and the state legislature. Schedule 7 enumerates these subject matters with the use of 3 lists. List 1 entails the areas on which only the Parliament is competent to make laws. List 2 entails the areas on which only the state legislature can make laws, and list 3 lists the areas on which both the Parliament and the state legislature can make laws upon concurrently. Tax structure in India is well developed, and the Constitution has made a clear distinction between the revenues of the union and state governments, articulated in the form of 3 lists of union, state and concurrent. Authority to impose taxes and duties is divided as follows. Distinct heads of taxation are provided under lists 1 and 2. There isn't any head of taxation as per the concurrent list, that is the union and the states don't have concurrent authority of taxation. The union list includes revenue sources that are the sole privilege of the central government. The list of 13 union heads of taxation imposed by the central government is 1. Taxes on income other than agriculture income. 2. Duties of customs including export duties. 3. Duties of excise on tobacco and other goods manufactured or produced in India except alcoholic liquor for human consumption, and 2. Opium, Indian hemp and other narcotic drugs and narcotics, but including medicinal and toilet preparations containing alcohol or any substance included in 2. 3. Corporation tax. 4. Taxes on capital value of assets exclusive of agricultural land of individuals and companies, taxes on capital of companies. 5th, estate duty in respect of property other than agricultural land. 6. Duties in respect of succession to property other than agricultural land. And lastly, terminal taxes on goods or passengers carried by railway, sea or air, taxes on railway fares and freight. Taxes other than stamp duties on transactions in stocks exchanges and futures markets, and taxes on the sale or purchase of newspapers and advertisements published therein, taxes on sale or purchases of goods other than newspapers where such sale or purchase takes place in the course of interstate trade or commerce, taxes on the consignment of goods in the course of interstate trade or commerce, and lastly, all residuary types of taxes not listed in any of the 3 lists. State lists includes the list of 19 state heads sources of revenue that are the sole privilege of state governments. These are land revenue, including the assessment and collection of revenue, the maintenance of land records, survey for revenue purposes, and records of rights and alienation of revenues. Taxes on agriculture income, duties in respect of succession to agriculture income, estate duty in respect of agriculture income, taxes on lands and buildings, taxes on mineral rights, excise duties for the following goods manufactured or produced within the state, that is alcoholic liquors for human consumption, and opium, Indian hemp and other narcotic drugs and narcotics. Next, taxes on entry of goods into a local area for consumption, use or sale therein, taxes on the consumption or sale of electricity, taxes on the sale or purchase of goods other than newspaper, taxes on advertisements other than advertisements published in newspapers and advertisements broadcast by radio or television, taxes on goods and passengers carried by roads on inland waterways, taxes on vehicles suitable for use on roads, taxes on animals and boats, tolls, taxes on profession, trades, callings and employment, capitation taxes, taxes on luxuries, including taxes on entertainments, amusements, betting and gambling, and lastly stamp duty. Next is a concurrent list or list of local bodies which includes 1. Tax on properties, that is building etc. 2. Octroi, that is taxes on entry of goods for use or consumption within areas of the local bodies. 3. Tax on markets, and user charges for utilities like water supply, drainage, sanitation, etc. Now, the revenue collected from taxes is distributed among the center and states in the following manner. Central tax revenues only for the central government. The central government imposes taxes and collects the revenue from such taxes. For example, corporate tax, tax on capital values of assets which are a property, or capital gains tax excluding land and custom duty. No part of the revenue collected through these taxes is transferred to the state governments. Central tax revenues shared with the states. The central government levies taxes, but a part of the revenue is shared with the states. For example, income tax and central excise duty. The central government imposes taxes, but entire revenues are given to the states. For example, wealth tax and real estate duty or property tax. State tax revenues only for states. State governments levy and collect tax revenues. For example, sales tax or VAT, motor vehicle tax and stamp duty. The transfer of funds from the center to the state governments needs to be continuously monitored, keeping in mind the regional needs. The share of state governments in central tax revenues and the process of distribution of revenues are based on the recommendations of the Finance Commissions, which is set up every 5 years by the President under Article 280. Under tax devolution, the shares of the states has risen from around 10% of the total tax receipts of the center in the 50s to 30.5% during the 12th Finance Commission, which was from 2005 to 10. The states though have been demanding the fixation of their share in central taxes at a greater level. The 13th Finance Commission has enriched the vertical devolution from 30.5% to 32% of the divisible pool of taxes. Now we will learn about the Income Tax Department. Income Tax Department operates in the Ministry of Finance under the Department of Revenue. It is accountable for managing following direct taxation acts passed by Parliament. These are Income Tax Act, Wealth Tax Act, Gift Tax Act, Expenditure Tax Act, Interest Tax Act, various finance acts passed every year in budget session. The Income Tax Department is also accountable for imposing double taxation avoidance agreements and deals with several characteristics of international taxation like transfer pricing. The two types of taxes, that is the direct tax and the indirect taxes, are ruled by two different boards, that is the Central Board of Direct Taxes called CBDT and Central Board of Excise and Customs called CBEC. We will now understand Central Board of Direct Taxes in detail. Central Board of Direct Taxes, that is CBDT, is a part of Department of Revenue in the Ministry of Finance, Government of India. It renders vital inputs for policy and planning of direct taxes and is also accountable for administration of the direct tax laws via the Income Tax Law Department. The CBDT is legal authority operational under the Central Board of Revenue Act 1963. It is India's official financial action task force called FATF unit. The Central Board of Revenue, as a department top body charged with the administration of taxes, came into existence as a result of the Central Board of Revenue Act 1924. Originally, the board was in charge of both direct and indirect taxes. However, the board was divided up into two when the administration of taxes became too unwieldy, namely CBDT and CBEC, with effect from 1/1/1964. This division was carried about by constitution of the two boards under section 3 of the Central Board of Revenue Act 1963. Next we learn about Central Board of Excise and Customs called CBEC. It is the nodal national agency accountable for governing customs, central excise, service tax and narcotics in India. The Customs and Central Excise Department was established in the year 1855 by the then British Governor General of India to administer custom laws in India and collection of import duties and land revenue. It is one of the oldest government departments of India. The duties of the board are as follows. Central Excise and Customs. 1. Collection of excise duty and service tax. 2. Collection of customs duty on land customs, stations, ICDs and SEZs, container freight station. 3. Prevention of smuggling through land customs station and border checkpoints. Customs. 1. Collection of customs duty on international airports, seaports, custom houses, international air cargo stations and international ICDs. 2. Prevention of smuggling on international airport and sea. Central Bureau of Narcotics. 1. Collection of narcotics duty in Madhya Pradesh, Uttar Pradesh and Rajasthan. 2. Prevention of drug trafficking and the abuse of illegal substances. Let us now summarize what we have learned in this module. The main tax enactment in India is the Income Tax Act of 1961, which is about to be replaced with a new act that is known as the Direct Taxes Code. Fiscal federalism or federation denotes a system of the financial relationship between different layers of the governments, particularly center and state. Article 265 of the Constitution mentions that no tax shall be imposed or collected except by the authority of law. According to Article 246, the tax structure in India is well developed and the Constitution has made a clear distinction between the revenues of the union and state governments, articulated in the form of the three lists of union, state and concurrent. Central Board of Direct Taxes, that is CBDT, provides crucial inputs for policy and planning of direct taxes and is also in charge for administration of the direct tax laws via the Income Tax Department. Central Board of Excise and Customs, that is CBEC, is a nodal national agency accountable for governing customs, central excise, service tax and narcotics in India.